Hello, welcome to Operational Excellence. This is Moses Gumadi, and in this video I want to talk about creating value for customers, shareholders and employees. Alternatively, we can title this video to Balancing the Interests of Customers, Shareholders and Employees. Balancing the interests of customers, shareholders and employees. Why? Because the operations create value. They are usually designed to create value directly to the shareholders or the investors for the business. However, they also create customer value. Obviously, they are designed to create customer value. There's no doubt about that. And they also create employee value. But remember, employee value and customer value both enhance shareholder value. And so shareholder value can be maximized if you pay attention to customer value and employee value as well. And that's the key. So if you balance them correctly, then you can benefit all three stakeholders very well. That's the point that I want to illustrate in this particular video. Let's begin with the shareholders, or to be precise, investors. And what do I mean by investors? So shareholders and debt holders together make up investors. So shareholders get the dividends, and debt holders get the interest for the money that they have invested in the business, whereas the shareholders get the dividends. And so both of them put together, both shareholders and debt holders together make up investors. So it is probably better to talk in terms of investors because you can define mathematically the value of the operations for the investors. And that's what I wanted to show you briefly. Now, the long-term value of the operations created is the current value, is the sum total of all the discounted free cash flows the investors are expected to receive in the future. So let me repeat this. The current value of a business operations, right? The current value of your operations. It's a long-term value, but it's the current value of the operations is the sum of all discounted free cash flows the investors, which means both the shareholders and the debt holders, if any, are expected to receive from your operations in the future. This definition can be worked out to create a mathematical term for value in this manner. Now, this is not the subject of my video here to explain to you how I got this expression. This is a standard textbook expression you can find, but essentially the investor value is based on the free cash flow, which in turn is based on the return on invested capital and the revenue growth, but it also depends on cost of capital, and it is given by the formula expressed here. Now, without going into the technicalities, let us consider the fact that the value is driven by free cash flow. What is free cash flow? So free cash flow equal to no plat minus reinvestment. So suppose if you run your operations this year and make a profit, net operating profit less adjusted taxes, that is no plat, let's say, right? You won't give away all of it to your investors, right? So investors, the shareholders don't get all the dividends, and then maybe you pay interest to the debt holders, and the remaining the shareholders could take all of it without having to reinvest anything in the business. But if you reinvest a portion of the money into your business, then what is left is the free cash flow. So free cash flow is the no plat minus reinvestment. No plat is like profit after tax, okay? Net operating profit less adjusted taxes. It is not exactly profit after tax in your accounting statement. It is slightly different, but that's again, it's out of scope here to explain the difference between no plat and profit after tax, but pretty much it's closer, okay? Right, so this is the free cash flow, and what we're gonna do here is that we are using this net increase in investment because in the previous year there would have been investment already sitting in the business which is turning around a profit, isn't it? And this year we got a profit out of which we taken some money and put back into the business, which means there is a net increase in investment. And this net increase in investment should be used to improve the revenue of the business, to reduce costs of the business, to reduce the working capital of the business, and also potentially to reduce the taxes, but it may not be possible all the time. So primarily address revenue, costs, and working capital. So for growth and for reduction in cost and working capital. Okay. If you do that, then you would expect a better NOPLAT in the next year. It will increase. So the point really is this, that if you look at this picture here, year 1, year 2, 3, 4, 5, the free cash flow that is available in every year is taken after deducting the investment out of the total revenue. So you've got the blue thing as cost plus tax, and the yellow is investment, and what you get is then the free cash flow, the red. Now, notice that the revenue grows year after year, and obviously the profit is also growing year after year, so you're getting free cash flow year after year, and that too is increasing, and it goes on. That's the idea. And the reason why you invest, obviously you need to put the money into the right places so that the right results can be got. But the idea of reinvesting into the business is to get this sustained output of free cash flow year on year, in perpetuity. Okay, that's the theoretical purpose of reinvesting into your business. And if you don't, it will look like this. So if you take away all the money in the first year, again run the business because you haven't invested anything, and the competition has gone ahead and it puts you pressure, your revenue will go down, your profitability will be poor, you get lesser free cash flow than what you would have got in the first year, and then this cycle continues until the point you basically produce no profit. You will get your operations, your business will go out into oblivion. And that's what happens if you do not reinvest into your business. I'm showing you extremes, right? So this is on the one side and this is on the other side. Okay, so the lesson here is then to create a balanced value creation. You need to know what your customer values. And it is always good to actually measure some of the metrics of customer value and really drive them through your operations. You need to also enhance employee value, because both of these drive shareholder value. That's the lesson, balanced value creation. So how can you spend some of this reinvestment money into projects that will drive customer value and employee value? So as far as customers is concerned, new and improved products they will appreciate, and they probably put a better price, a premium price, to buy your products if you do better than the customers. Improve your current performance of your products and services. Bring in new products and services by taking care and taking into account the customer feedback. Maybe you could drastically change and improve your products. So look at the competition. Improved delivery speeds. Customers like quick delivery, quick shipping, quick service, and of course better customer experience. These are some of the key things that you could put money in to improve the situation and improve your revenue. Also, of course, when it comes to the employees, you could do also, for example, cost cutting or efficiency improving or lean projects of that sort. And if you can cut down your working capital, cut down your cost, you will be able to offer to the customers a better price than before. That will also increase the customer value, although I have not mentioned here. Employees, provide them better tools and environment to start with, okay? Because anything goes wrong, obviously that is going to cost you a lot of money in terms of the risks. Number two, it's always good to give them better tools to carry out the work properly. Otherwise, if things go wrong, delays will happen, loss of money will be surely there. Capability building, training and building of capability within the employees is really essential, also to improve their engagement in terms of team building or the basic engagement of employees into what they're doing. Okay. Again, this is not really, I'm not trying to emphasize on the whole subject of human resources improvement, but these are some of the key things that you should be looking at in order to improve the employee value and customer value, because they directly impact shareholder value. You cannot in perpetuity generate shareholder value without paying any regard to customers and employees. I hope you like this video. Please do subscribe to my channel by clicking the subscribe button, and also click the bell icon so that you can receive notifications from me for future videos. Thank you very much.